Apple Incorporated is facing significant challenges in China, its largest overseas market, leading to a notable decline in iPhone sales and a loss of market share to domestic competitors like Huawei. This downturn is impacting Apple's global performance and stock value. Declining iPhone sales in China. In the first quarter of 2024, Apple's iPhone sales in China dropped by 19.1% year-over-year, reducing its market share to 15.7% from 19.7% the previous year. This decline pushed Apple from the top position to third place in the Chinese smartphone market, behind Vivo and Honor. Factors contributing to this downturn include increased competition from domestic brands, a government ban on Apple devices for employees, and the absence of Apple Intelligence features in China due to regulatory constraints. Huawei's resurgence. Huawei has capitalized on Apple's challenges, with its smartphone sales in China surging by 69.7% in the same quarter, driven by the successful launch of its 5G-capable Mate 60 series. This growth has elevated Huawei's market share to 15.5%, closely trailing Apple's 15.7%. Huawei's emphasis on AI features and premium devices has resonated with Chinese consumers, further eroding Apple's dominance. Impact on Apple stock value. The decline in China's market has had a ripple effect on Apple's global performance. Despite reporting a 5% year-over-year increase in revenue to $95.4 billion in Q2 2025, Apple stock dropped 3.7% following concerns over the impact of U.S. tariffs and legal challenges to its services business. CEO Tim Cook warned of $900 million in additional costs for the June quarter due to tariffs, prompting Apple to shift some iPhone production from China to countries like India and Vietnam. In summary, Apple's declining performance in China, coupled with rising competition from domestic brands and geopolitical challenges, is exerting pressure on its global market position and stock value. The company's strategic shifts in high inflation and rising interest rates are increasing market uncertainty, and both businesses and consumers are feeling the pressure. While the job market remains strong, consumer spending is slowing down, and economic growth has also slowed. In the coming months, balancing growth and inflation will be the key issue for the U.S. economy.